Alright, y'all, today I want to talk about stop losses. This is very important. I think this is something that most newer traders, they get wrecked simply because they don't understand how to use a stop loss. And of course, this goes hand in hand with finding a good entry. This goes hand in hand with leverage. And I think this will help a lot of people. I've been getting a lot of questions about this, so I wanted to make this video and clarify. This is for newer traders. This is for people who've been trading for a long time. Basically, when it comes to entering a trade, if we want to have the best possible outcome, let's say outcome, if we want to have the potential to make a lot of money while simultaneously risking a very little money, then this is something that you need to take to heart. When we're trading, and I'm sure you've heard of this before, it's important to have a very good risk to reward ratio. And what that means is we want to find trade setups where, let's say we're entering a long position, where we can potentially earn, a lot of money. Let's say 10%, right? We have the potential to gain 10%. And we want to keep that stop loss as tight as possible. Let's say we're in a position where we can have a 0.25% stop loss to potentially gain 10%. What this means is that even if we lose 4 trades in a row, let's say we have 4 of these setups where we're risking 0.25% and we're putting 100% of our account onto the trade, 1x leverage. We can lose 4 trades in a row and only lose 1% of our account. And then that 5th trade that wins, we're gaining 10% on our account. So overall, 4 losing trades, 1 winning trade. Overall, our net profit is plus 9%. If we can get really good at finding those perfect trade setups, this is something that's absolutely possible to do, to find these good trade setups. And here's what we need to do, okay? Recently I entered a short trade up here, right here. It was a really nice short trade. And let me show you, if we come to put on some levels here, we actually came up to a daily level of support, a daily level of resistance. And that daily level of resistance was right here at about $35,925. Now, if you're unfamiliar with the way I trade, you can watch the other content on my account, my YouTube channel. Check it out. There's a lot of good info on here. If you're totally new and you want to learn how to get levels, how to do technical analysis, check out jasoncaspertrading.com. This course will give you the knowledge and the skills you need to become a confident, profitable trader. And it will walk you through everything you need to know in order to get these types of levels so that you can trade in the way I'm about to show you in this video. Now, when we come up to this level, we need to understand a few things. First of all, why did we enter the short here? Well, we're getting a massive, massive bearish divergence on the 1 hour time frame on Market Cipher B. If you don't have Market Cipher yet, it's a great indicator, the #1 trading indicator out there. 10% discount in the description. But we were getting a bearish divergence on Market Cipher as we're coming up to a resistance, which is telling us we're going to come down. We come up above our daily level, we come back below it. And what this does, if we're entering a short here, is this high right here at about 35,952. This is the level that we want to put our stop loss just above. So if we're shorting here, okay, we're entering our short position as we lose this daily level, we're putting our stop loss now above that. We're risking 0.25%, 0.24%. We set our take profits along the way down. Okay, and of course we're taking profit along the way, guys. The purpose of this video is to talk about the stop losses, not necessarily the take profits. But the thing is this: we're coming down, we're taking profit along the way. What we can do, because we have a 0.25% stop loss, is we could put 100% of our account onto the trade with 4x leverage. And even if we get stopped out, we're only risking 1%. Now, let's go back in time and take a look at how this trade could have worked out for us. We could have gotten a 7% gain, only risking a 0.25% loss. So let's say we actually did short this with 4x leverage. Well, let's pull out our handy dandy calculator here. And let's say we have $10,000 in the account, right? $10,000 in the account times 4, because we're 4x leveraging, so we have $40,000 on the trade, okay? $40,000 on the trade. If we get stopped out, we're losing $100. But if we win the trade, we're getting $2,800, okay? We're risking $100 to potentially earn $2,800, okay? So let's say we win the trade, we win our $2,800. Now in our trading account, instead of having $10,000, we have $12,800, okay? $12,800. Now if we enter the same exact trade again, right? 4x leverage, and let's say we're earning, 7% on that. Now for that same trade, instead of earning $2,800, we're earning $3,584. And then again, now our account, instead of having $10,000, we're up now $6,000 after 2 trades. Now keep in mind, we're not going to win every trade, and not every trade is going to give you such a big gain, right? For example, there was another short that I took somewhere in here, okay? And this trade was also a short. This was a level here when we lost the level. I had my stop loss up here. Still risking less than 1%. My take profit set down here. We hit take profit 1, which is about, let's say just a 1% move, right? A 1% move. Well, now you got to keep in mind, because we've been using good risk management, let's say I get stopped out of this trade, right? It's a 0.5% stop loss, so I can 2x leverage my whole account, and I get stopped out now. So I'm losing a trade, and now I'm just going to lose 1% of my whole account. Okay, so 16,384, 163. So, $16,384. I lost the trade. I lost $163. Not a big deal. Not a big deal. I still have $16,000. I could continue to lose trade after trade and still be in the profit because of the good trades that I've taken. Now, here's the problem that people run into. People say, oh, look, we're going down. We're going down. I'm going to, because I see that we're going down, I'm going to enter a short right here. As I see that we're coming down, I'm going to use a really tight stop loss, and I'm going to set my take profits down lower. The problem is this: if you don't have a good entry, if you don't have a reference point from which you are entering, aka a line of support or resistance, you don't know if there's going to be a retracement there. Even if we continue down, you don't know if there's going to be a retracement. And so what happens to people is they are not using a stop loss in the right place. They're just saying, I only want to risk 1%, so they're always going to use a 1% stop loss. Well, let me tell you, if you're only just using a 1% stop loss to risk 1% of your account, you're doing it wrong. Instead, what you need to do is you need to have a very calculated entry. You need to make sure that you're entering at a place of support or resistance. Like, for example, we come up, we get the retest right here on the daily level of support. You could long there. Long when we retest that level. Again, we have a very tight stop loss. We can set our profits along the way up. This is a very good risk to reward ratio. Again, if somebody doesn't understand why I'm putting the stop losses where I'm putting it, it's because this. If we're trading what we think is going to happen in the future, okay, and I think we're in an uptrend. Let's say I think we're in an uptrend from down here because we put in the high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. And I'm trying to get in that uptrend right here as we're putting in a higher low. And I'm going to try and buy a higher low. If we now put in a lower low, okay, that means that the uptrend is invalidated, because what makes it an uptrend in the first place is the fact that we're printing higher highs and higher lows. So if we enter here and we roll over and print a lower low, then we need to get out of that trade because we're not in an uptrend anymore. We should not be longing in a downtrend. So we put the stop loss below the last low, because the price can come all the way back down to here and still put in a higher low. But if the price comes below that red line, now we're putting in a lower low, the trade is invalidated, and we need to get out. The same with shorts. If we have a reference point, which is a level of support and resistance, and we have a swing high or a swing low, it gives us a very clear reference point saying, okay, I think we're coming down from here, but if the price comes back up higher than this, I know I'm wrong, so I need to get out of the trade. The problem happens when people are entering trades in the middle somewhere without any reference point, like entering short maybe like just right here because they think we're coming back down more, and in reality we're going to retrace up a little bit more. It's like people don't understand that you need to have a very clearly planned out entry. It can't just be in the middle of nowhere. Another thing that really gets people wrecked is not understanding how to use leverage, because leverage is a tool that can be used to leverage the amount of capital that you have in your account. If you're using it in a proper way, it can really be beneficial to you. Like I was saying in the beginning of this video, if we're shorting here and we're able to use a stop loss of 0.3%, let's say, or 0.5%. Now I can 2x leverage my whole account and still only risk 1%. Still only risk 1%. When people are using high leverage and their stop loss is making it so that they're risking, 10, 20, 25% of their whole trading account. Remember how I was showing in the beginning, like if we are smart about our entries and smart about our risk management, we're pretty much guaranteed to be making money. But if I lose, right? If I lose 25, or let me put it on paper, right? Let's say that I hang on, these are trade setups from earlier today. Let's say that I do have, $10,000 in my trading account, right? And then I go ahead and I blow 25% of my account. Okay? Because I did one bad trade where I 10x leveraged my whole account, I didn't have a good entry, and I lost 25% of my account. Now I only have $7,500, right? I only have $7,500. If I want to make back my 25% that I lost, do I have to now, remember, I lost 25% of my 10 grand. What happens if I make back 25%? What happens if I enter a trade that was just as good, that it was equally as good as the bad trade that I made with 10 grand? Even if I enter a trade and I gain back my 25%, I'm only, hang on, 7,500, 25% of that is 1,875. So I'm still in the red, even if I gain 25% back after losing 25%. I'm still in the red. It's an uphill battle. It's an uphill battle because you could enter a trade that's equally as good as your bad trade was bad, and you're not going to get that money back. If you're losing money, it becomes harder and harder and harder and harder to make money. It's an uphill battle. But if you are finding those good entries, then it's a downhill battle. It becomes fun because the entries are good. You're not even going to take a trade unless it has a good entry, right? Like this long right here. We lost the daily. We reclaimed it with momentum. Right now we're up about 2.5%. That stop loss 0.81%. So you could put your whole account on the trade, 2x leverage, and still only be risking 1.6% of your account. That's still good risk management. I recommend anywhere between 1 and 5%. Closer to 1 is better. But, now what you can do is you can lock in that profit. You can grow your account. If you're taking these good trade setups, it becomes much easier to make money and to not lose money. And how are we going to make sure that we're not losing money? Here's how. If we enter our short, let's say up here, We have our stop loss right up here, 0.25% stop, right? What I like to do is I like to take profit along the way down, okay? This is actually a trade that I took this morning. Well, no, I'm sorry, I took this last night. This long is a trade that I took this morning. Two longs right here. Both times we reclaimed the daily. If you have a take profit level set right here, which I'm pretty sure I did, what you're going to do is you're going to take 30% of your trade out, right? I'm in a short, so I'm going to buy. Let's say I had 1,000 contracts on a trade. I'm going to buy 330 contracts here and close 30% of my short. And then I'm going to go ahead and I'm going to move my stop loss to my entry. Okay, what this does is now it guarantees that if I get stopped out, like price has come down, it hit my first take profit, I took 30% out of the trade. If I get stopped out, I'm still stopped out in a win. Okay, it's still a win. It's not a loss. I'm still have more money in my account than I had before the trade started. Now I can leave that stop loss there. We hit take profit 2, take more out of the account, scooting around town, boom, hit take profit 3, take a little bit more out of the trade. What this does is it's guaranteeing that you're locking it in a win, where at the very worst, you're going to have more money in your trading account than before you entered the trade. And if you have more money in your account, then you will be able to put more and more money on trades in the future. And this is called compounding. In fact, if you only made 1% a day, within a year, you could massively grow your account, right? If you had $10,000, right, and now you're making 1% on that 10 grand, now you have an extra $100. Now, the next day, you make 0.01%, you make 1%, now you're making $101 instead of $100. Now imagine if you're in a position to do this, okay, with leverage, where you're using smart leverage, where, you're in a position where you can 4x, 5x leverage your whole account on one trade. So then your $10,000 becomes $50,000. Now you're making $500 a day. And so now instead of having $10,000, you have $10,500. And now you can find a good trade setup where you can use 5x leverage your whole account, only risk 1%, and now you can put a lot more money. You can put $2,500 more onto a trade than you could the day before, because you had that good setup, and because you're locking in profit. This number will continue to grow. So now the second day, you're making $525, and so now you've just made $1,025 in 2 days, because you had a smart entry with a smart stop loss and good risk management, and you locked in your profit, and you made sure that you weren't going to be in a loss, and you only took the highest probability trade setups. That is key. That is key. And I feel like a lot of people are just entering trades when they see like a green dot on Market Cipher, and they're just using high leverage, and they're not thinking about their entries, they're not thinking about their stop losses. I mean, imagine if you had entered a trade right here on this green dot on Market Cipher, okay, you didn't have any kind of reference point, you had no kind of support or resistance, and you used 10x leverage, no stop loss, you would have been down 16.7%. 16.7% of your account would have gotten blown in one trade here. 16.7%. That's how people get wrecked and never recover. If you can instead focus on finding those points, those levels of support and resistance, whether they be Fibonacci levels, like for example, the trade that we took, this short, let me see here. Yeah, this short right here. We had a Fibonacci level of support and resistance. We came up to it. We tapped it. Look at everything lined up when we're taking these high probability trade setups. Market Cipher B on the 4-hour was starting to print a top. On the 2-hour, Market Cipher B was giving us a almost top as we're touching the level. The 1 hour is giving us literally a red dot as we're coming up to this level. The lower time frames were giving us massive bearish divergences. Everything's lining up. We have a perfect entry right here. We have a perfect stop loss, only risking 0.38%, right? That means we can 3x leverage our whole account and only risk 1%. And this trade was a nice trade where we could have made 10%, right? Could have made 30%, only risking 1%, could have made 30%. But on the other hand, if you're not finding these good entries, you're not using support and resistance, and you're just entering willy-nilly, let's say you enter short, you're like, oh, we're coming down, I'm going to enter short right here, right? Well, what happens? You know, you risk, if you're 3x leverage, you just lost 6% of your whole account. You know, you probably would have gotten stopped out of this trade. So it's like, for people who are new, and even if you're not new, honing in your risk management will really change the game for you. It will make it much easier to make money and not lose money. Where you could be in a losing trade and still be profitable overall. In fact, if you ever find yourself in a position where you out of necessity, like let's say, for example, we do want to long here, okay? We do want to long here. Let's say we get our confirmations for some reason to long here, and we have to put our stop loss now below this level here. What you would do is you would enter your long here. You would put your stop loss below the last swing low, 3%. Right? It has to be a 3% stop loss. What does that mean? A 3% stop loss. That means you have to cut your account into thirds. You have to cut your account into thirds and only place as much of your account on that trade, where losing 3% on this one trade will net loss you 1% of your whole account. That means you can't put 100% of your account on this trade, and you can't use leverage if you want to use this good risk management. Does that make sense? If we have a 2% stop loss, what do? We put 50% of our trading account onto the trade. That way, if we get stopped out at a 2% stop loss, we're still only losing 1% of our total trading account. And so I'm sure you can see why the better the trade entry, the more, the better your entry, the more reward you can have and the less risk you can have. That's why we want to find those good setups, because the same trade setup down here would have allowed us to now risk only, let's see, 1%, just 1% of our account, right? Let's say we entered right here. We're risking 1% of our account. We can put our whole account on this trade. We already would have been up right now. Nice 2.34%. And, again, if we lock in profit here, if we take out 30% of our trade and we move that stop loss into break even, then, we're guaranteeing we're going to win money. So, a lot of trading is just finding those good entries. That really is what it comes down to, guys. That's what it comes down to. So I just wanted to make this video. I hope you found it helpful. Again, if this is something that you want to learn, then check out jasoncaspertrading.com. This course will give you the knowledge and the skills you need to become a confident trader. If you don't have Market Cipher and you would like Market Cipher, then check out the link in the description of this video to get a 10% discount. All right, guys, God bless, and I will see all of you in the next video. Peace.